All right. So, a very good evening, everybody, and a good day. Welcome back to yet another interesting session. And this time, our topic is on mainstreaming insurance and risk financing for disaster resilience. As we all know, the goal of risk financing is to ensure that sufficient financial resources are available to address the economic and social impacts of disaster. And it also promotes a more sustainable and resilient approach to disaster management. Like risk financing can involve various financial instruments such as insurance policies, contingency funds, and bonds, which helps to transfer or mitigate the financial risk of disasters. Like it is very clear that donors, international organizations, governments have a very significant role in supporting and scaling up of risk financing and insurance mechanism in disaster management. Some of the examples can be like, let's say, World Bank had this program called as Global Risk Financing Facility, GRIF, which actually provided like financial support to developing countries using innovative risk transfer mechanisms such as catastrophe bonds, index-based insurance, and weather derivatives for disaster response and recovery. And also, if I can bring it up about like African Risk Capacity, ARC, like which was a specialized agency of the African Union that provided insurance coverage to member states, again, like using index-based insurance mechanism to trigger payouts to member states when specific weather or climatic conditions are met. Like in short, donor agencies or international organizations, governments, etc., could play a very crucial role in promoting the use of risk financing and insurance mechanism in disaster management. Like, and there are proven evidence that these kind of financial support does cater to the needs of the vulnerable population, especially during a disaster, and help them to jump back to their previous conditions, like and also build resilience. So once again, like to take this discussion forward, Sphere India Academy, in collaboration with Climate Action Resource Network Asia Pacific, CARN-AP, and PRISM India, is organizing this virtual discourse on the topic mainstreaming insurance and risk financing for disaster resilience, to explore the possibilities of risk financing and insurance and to better the disaster resilience in India and beyond. So once again, thank you all for joining us today. I really hope that today's discussion will bring out a lot more like newer perspectives and knowledge based on this topic. So before starting, let me briefly give you an introduction about our eminent panelists that we have lined up for today. Starting with Brigadier Pramod Kumar Singh, Vishesh Seva Medal, is an experienced disaster management professional with nearly 36 years of Army experience. Throughout his career, he has served as an emergency response coordinator, disaster preparedness specialist, and disaster relief volunteer. He has chaired a session in national level disaster management seminar, which was Kashmir centric in the year 2011 at Nakurda, J&K, and headed Indian delegation in humanitarian assistance and disaster relief coordination exercise with Indonesia in the Andaman Sea and areas around in year 2013. Brigadier Singh has extensively worked on landslides and avalanches and also submitted his dissertation on the subject of avalanches in Kashmir in Lucknow University. Currently serving as a senior consultant at UP SDMA, he is involved in various DRR projects in the state and was involved in formulation of UP state policy and plan on disaster management. We welcome you to the session, sir. Moving on, we have our next speaker, Mrityunjay Das, who is a Deputy Director of Humanitarian and Resilience at CARE Bangladesh, with over 12 years of experience in climate resilience, including community-based adaptation program planning, operational and financial management in vulnerable regions of Bangladesh. He emphasized the principle of locally led adaptation and ecology-based adaptation in program planning and development, while also working on knowledge building and capacity enhancement for climate change and environmental health at national and international level. Mr. Joy has established collaborations and partnership with various agencies, including international donor agencies, government corporate groups, and non-governmental organizations to achieve outcomes in climate change adaptation, disaster risk reduction, and humanitarian response. At CARE Bangladesh, he provides strategic leadership in program development, project cycle management, resource mobilization, and compliance management, contributing to the country's efforts to support Bangladesh's journey to resilience and prosperity. We would welcome you to this session, sir. Finally, we have our moderator, Dr. Reba Chakrabarti, who is a current department head and program coordinator at Holy Cross College, Agartala, affiliated with Tripura University. With over 36 years of experience in teaching and academic administration, Dr. Reba has a PhD in zoology from Northeastern Hill University. She has also guided students for various research topics and seminars and received numerous awards and recognition for their contribution to education, including the Best Teachers Awards in 2016. We welcome you also to the session, ma'am. So with this, I would like to open our session for the further discussion. Over to you, Dr. Reba.
Hello, good evening, everybody. Good evening, everybody. Can you hear me?
Good evening. Yes, ma'am, we can hear you.
Audible? Okay. Since Hannah has already given a brief introduction to our eminent speakers today, and to open the session, I think we begin with Mr. Mrityunjay Das, Deputy Director, Humanitarian and Resilience Care, Bangladesh. So, sir, we directly go to you with our questionnaire. And our first question to you would be to elaborate on what is risk financing and insurance, and why is it required for disaster management?
Namaskar and good evening. Thank you, Dr. Reva, for the question. When you talk about risk financing, I mean, let us first look at the broad groups who are at risk or being impacted by climatic or geophysical disasters. So, I mean, if you look at the risk groups, the poorest, I mean, irrespective of gender, among them, of course, women and girls are most impacted. And of course, the next group we can talk about are the farmers from all subsectors, and it could be crop, it could be livestock, poultry, or fisheries, and of course the business and industries. Even though all of them, all these groups are somehow or somewhat are at the mercy of nature. And of course, another group we need to focus is the government, because the main duty bearers, they are impacted by any kind of loss and damage in any part of the economy in their political vicinity. So, I mean, how do we protect these groups from the finance or economic loss? So there are many ways, of course. So, but I'm sure that we all would agree that increasing frequency and magnitude of disasters have made it sort of impossible for the developing countries and tourists to absorb the loss and damage. It's kind of perennial thing. So the risk need to be either retained or transferred. So, I know if you want to define disaster risk financing, we can define it, the fiscal mechanism, which addresses the impacts and economic losses caused by natural hazards like cyclone, droughts, earthquake, floods, and they also support these impact groups. I have outlined these 4 broad impact groups to increase their financial resilience to such disaster. So, however, there can be no single financial instrument that can address all kind of risks. So, if you talk about how to manage this risk, one can imagine of international assistance. That is a very, very sort of popular mechanism we used to have that. But with the changing time, can we even expect that international assistance would cover this huge loss which is occurring in the developing countries? Or so this is so uncertain. So let's talk about the practical mechanism. One, if you talk about high frequency or low severity events, which is very common, we can think about budgetary instruments. It is possible for developing countries to reserve funds specifically designed for those kind of disasters. And for more severe event, the government or the state government or the federal government, they can provision contingent financing, with financial instruments that provide kind of liquidity, immediately after disaster or any prolonged stresses. However, what about the low frequency but high impact disasters? We need to resort to market-based instruments. I'm sure we agree that because this is the reality, we like it or not. So this is the mechanism, we call it risk transfer. For assets, for such, it could be property insurance, of course, it could be agricultural insurance, anything. That's the way we transfer the risk for budget management. For high intensity or high magnitude disasters. So I think the other part of your question was why it is required. Of course, we know that disaster risk financing and insurance, helps the impact groups, especially the vulnerable groups I have talked about, and also the government to ensure that their populations are financially protected in the event of a disaster, and it supports countries to develop and also implement, kind of tailored financial mechanism or strategies that increase their ability of the farmers, businesses, low-income groups, the most vulnerable, as well as the national and local government to respond timely and efficiently after a disaster. Having said all this about disaster risk financing and insurance, I must emphasize that it is just one of the components of comprehensive risk management. There can be no single component or any silver bullet that can cover the risk financing or risk management as a whole. So we have to remember that disaster risk financing, it doesn't replace the risk reduction of climate change adaptation measures. The more we can adapt, or the more we can adapt, the less will be the loss and damage, and the less suffering will occur. So, having said that, again, we also acknowledge that loss and damage is a reality now. So we must explore a kind of innovative climate disaster risk financing and insurance mechanism, and consider it not the most, but as a major instrument in managing disaster risks in the developing country and even in the developed country. Thank you, Dr. Reba.
Thank you, sir. We have another question for you. What is the current state of risk financing and insurance in disaster management?
Well, if you talk about this, a lot has happened in the last 2 decades, globally, regionally, and of course within the national governments in our region, the Indian subcontinent, and also other parts of the country, of the world. So over the last 2 decades, disaster risk financing has evolved a lot, as I was saying, in share and also in forms, and there is a lot of increasing attention to risk transfer, particularly insurance, of course. If you look back, an index-based insurance for weather risk management was successfully piloted in Odisha, India, in 2003. So it is almost 2 decades ago. So it's not really new. 2 decades is a long time, and again. This kind of mechanism, I'm sure that everybody talks about the Caribbean. Somebody speaking? Okay. The Caribbean catastrophe risk insurance facility that was introduced in 2007. So that is also quite old. Because we don't have much time to adopt, and we really need to be faster. And the other regional initiatives like African risk capacity, Pacific catastrophe risk insurance, that was also been, that I think that happened in the beginning or in the middle of the last decade. And, we also know about this discourse which started in Bonn 2015 when the G7 leaders and also the G20 and B20 groups, they agreed to form a platform that is mostly, it is the mostly talked platform at this point, that is Insurance Global Platform, IGP. And that came into reality after 2 years in 2017. And of course, there are many kind of national and regional pilots, pool of risk initiatives. And most recently, of course, I cannot just talk about this. The G7 and B20 groups launched this global shift in COP27 in Egypt. So, that is also, there is a commitment of 200 million as initial funding. So this is kind of a pre-added support to design to address loss and damage from climatic events. So we also need to acknowledge this climate and disaster risk financing initiative. These are very complex, because there are so many actors on the different platforms. There is the UN agencies, there are the national governments, of course. There is the humanitarian agencies, NGOs, INGOs, the private sector, of course. And of course, we must say that the World Bank has a big role to play, and they have actually one of the major proponents globally of the risk financing and risk insurance initiatives. So this is what is happening all over the world, regionally and nationally. Dr. Eva, over to you.
Okay. Well, sir, we have a third question for you. What are the challenges and opportunities for scaling up risk financing and insurance mechanisms in disaster management?
Well, the challenges are at different levels. That could be systemic as well as cultural. If you talk about them, we will, of course, there are sort of insufficient knowledge and understanding on climate risk insurance, among public as well as among the policymakers, and especially, and also the civil society workers. There are a lot of reservation or some improper ideas as well. And so that is to say that this is actually a low level of insurance literacy. And of course, there's lack of coordination among the insurers as well as the government agencies, private sector. And there's also lack of institutional and human capacities to design and implement climate risk transfer mechanism. And there's also sometimes there are lack of support from lack of policy support, lack of legislation in some of the countries, especially in the developing countries. And of course, where there is policy, you will find that there's kind of inertia among the actors. They are not really acting. And many developing countries, for example, Bangladesh, Bangladesh has adopted a conceptual framework, of ex-post shock responsive social protection mechanism. However, this is exposed, and also there are gaps in selecting participants. I mean, the program, the beneficiaries. There's lack in the support mechanism, in disbursing mechanism, and most importantly, these services are not particularly focused on addressing climatic shocks and stresses. And there have been sort of there is a lot of pilots, not only in Bangladesh, I know about India and other subcontinent countries, those ex-ante measures, the kind of micro insurance and weather indexed insurance. But most of them were, unsuccessful in the sense that they couldn't sustain for long. Some of the pilots are essentially problematic, I would say, because, in design, in the design of those pilots, the vulnerable community didn't have to pay the premium at all. And hence, when the project is over, the principle of insurance mechanism was totally missing, and when the project is over, the particular community who was enjoying a risk financing mechanism, they were reluctant to add this mechanism. So, sorry, you were speaking? Okay.
Sorry, sir. It was a disturbance. I fixed it. Yeah.
Okay. So, the other thing we can talk about is acceptance, acceptance of insurance, especially, among the low income groups, in Bangladesh, the non-life insurance penetration is only, 0.16%. It was, of course, the data from 2020, but, this is one of the lowest among Asia Pacific countries. I'm not sure about India, but I think this is going to be low as well. Not as low as Bangladesh, but it will be low, I guess. So it is easy to understand that the uninsured losses due to disasters and climatic change are significantly high in this sort of developing countries. And of course, the response from private sector has not been encouraging enough. In Bangladesh, like there are like about 50 insurance companies. And basically, only one of them, I won't name it, currently working on climate risk. And most of the concentration on risk financing is, for the urban people. Say, for example, car insurance, industrial property insurance, things like that. So nothing for this most vulnerable groups from different corners of the country. I understand that the scenario would be a little better in India. I'd like to hear from Vigdesh Singh and others and learn about that. And of course, the private sector corporate social responsibilities initiatives, there are CSR, right? But however, they have hardly any focus to support loss and damage funding. So so that's one missing area I see. I would say that they have a lot to do in terms of managing disaster or climate risk. So, and besides, there is increasing frequency and intensity of disasters. So it actually also minimizes the capacity of these vulnerable people to pay the premiums. So you see that, as I said, that there are both cultural as well as systemic hindrances in adopting climate and disaster risk financing and insurance in the region. Thank you, Dr. Eva.
Well, thank you very much, sir. I think we are done with the questions, and what I gather from your discussion on the questions that we asked you, you said about the contingent grant. I mean, you said that the risk financing and insurance is required to create a contingent grant so that the risks can be avoided, and we can really maintain the whole disaster if we have a good amount of contingent grant in hand with us. That is one thing you spoke about, and I think it is really, really very important that we think about it. And you said that the World Bank and other, different organizations, they are trying to finance, and they are thinking about the risk financing and insurance and disaster management. But then you also said that the designing or the whole thing has yet to develop much more. So I mean, what would be your suggestions, sir? How do we go about the designing part of it? Any suggestion?
Yeah, I mean, of course, I can see a hand raised. One suggestion would be that the design has to be practical, proper. When you talk about insurance, so especially for this part of the world, it has to be proper and gender sensitive as well. Because I know there is no point of insuring, developing mechanism which is of no help for the poor people. And also, if payment of premium is an issue, I mean, that can be shared. I mean, of course, since the kind of governance we have in this part of the world, it is, we cannot talk about fully ask people that you take the full responsibility, because from a climate justice point of view, they are not the ones who are actually responsible for this kind of increased climatic shocks and stresses. So, that the premium can be shared between the people and local government. Also, the private sector, as I say, the private sector, if their main business, if their main corporate social responsibility, they can play a role as well. I mean, they can extend their hand. So this is a kind of a mixed mechanism, I would say, as I was saying that insurance or risk financing was one thing, is a major thing in risk management, but not the only thing. So this has to be a joint effort. Thank you.
Yes, I think we all agree with you, sir, what you say, so. And yes, the low-income group.
Devadi,
Yes,
there is a question. It's not my question. I saw it in the chat box. What Dr. Papia Mojumdar has written. So that is very, very pertinent. Because we need to understand the differences. So I need that issue to be raised, if possible, by Dr. Joy. I'm not saying afterwards also the other can say, but you see that validity of that issue. Yeah, thank you.
Sure, sir. We'll keep in mind that is being answered, once the presentation is over.
Okay. Shall we move on to our next speaker then?
Yes, ma'am.
Okay. I think our next panelist is a very eminent personality, Brigadier Pramod K. Singh, Senior Consultant, Uttar Pradesh State Disaster Management Authority. So we would like to hear from you, and we have a set of questions for you as well. Shall we directly go to the questions?
As you feel convenient, ma'am, that's okay.
Okay, one of the most important questions for you is that, how can we leverage public-private partnership in promoting disaster resilience through insurance and risk financing?
Thank you, Dr. Reba. Thank you very much. Before we take on the public-private partnership, I think there are a few essential elements of entire financial strategy. When we talk about the disaster risk reduction or risk management, I think we should be clear on few aspects. A financial strategy is in the overall ambit, and insurance is one part of it. There are various elements along the spectrum. You look at the mitigation efforts and the financial intervention in the mitigation part, preparedness part. And when come to the post-disaster, we talk about response, we talk about reconstruction, rehabilitation, and a whole lot of things. So as far as these two elements are concerned, since Mr. Mrityunjay also mentioned that how do we stand in India on this, I think we are fairly okay as far as the mitigation, financial intervention is concerned, and as far as the compensation post-disaster elements are concerned. We have a fairly robust policy priority at the national level, at the state level, and also fair allocation of funding into these two areas of risk reduction. Now the question comes of the third element, which is the financial insurance. I mean, that's the area which I would focus on. When we talk about public-private partnership and your question, the leveraging of that, we must understand the potential of private today. What is the notion today that the disaster risk reduction we call about, or we talk about the insurance, is the function of state, exclusively function of state, which is not, because today there are many private players. We talk about the insurance companies, we talk about the civil society organization, the national, international donors, They are volunteer organizations. And everybody put together is enormous potential to, venture into this area. If we take the risk insurance in a solo mode, either by the private players or by the government, I think it's a no-go. The PPP, I will call it henceforth, the public-private partnership in my talk. PPP has come to stay, and it is the future. I'll give a few examples. I know we go back into the history. You go to the great Mississippi floods, 1926-27. After the floods, all the private players who were exclusively responsible, they backed off. And the entire burden of relief and the subsequent operation fell on the government. The federal government did excellent job on the as far as the relief is concerned, and they continued doing it for a few decades. Till the time there was a realization in the government, and they realized, this is not the way to go. In 1960s, they said it's not sustainable. The private failed, they backed off. The government now realized that it is not sustainable. They came out with a national scheme of national flood insurance program in 1968, and thereafter doing fine. Similarly, if you look at the Northridge earthquake in 1994 in the US, we again find most of the private players who were responsible, they backed off. They again absconded the market. So once again, they came out with the California Earthquake Authority, which again with the PPP model, and they are doing a good job. Similarly, there are examples in other European Union, Japan, Australia, where these things are there. So the potential of these private players needs to be realized first. We have got to make a culture of insurance in the state, which again I will go back to what Mr. Mrityunjay talked about. We are maybe better than few countries, but our insurance penetration is quite low. So these are the areas we have got to look at. As far as you're talking about leveraging, now government can intervene in large number of ways, more than one ways definitely. Because when we talk about, the low penetration, I would again like to take on few examples. I gone through a study of AOM, the agency which does a lot of, survey work and all this consultancy on the subject. The United States, year 2022, the natural calamity losses were about 95 billion US dollars. And the insurance cover was about 50 to 53 or 54 billion dollars, which is almost about 60%. You talk about Australia, the Queensland and New South Wales flooding in 2022, their losses, insurance coverage was again about to the tune of 50%. Now I'll take the example of, we're talking about the developing countries. Let's take Pakistan. Pakistan floods last year had the loss about $15 billion. And can anybody guess what was the insurance coverage? $0.1 billion as per that study. I'm not vouching for the authenticity of the study, but one fact which emerges very loud and clear is that the insurance coverage is pretty low. Let's talk about India. Seasonal flooding of 2022. The agency estimates the losses to the tune of about $4.5 billion. And the coverage was once again $0.1 billion, which is about 2% or 2.3%. So we have got to change the culture. We have got to ensure the transparency and accountability in the system. We need to interject the government because there a lot of things can be done with the government. And we have got to recognize the potential of many private players and put them into the basket to get the greater and better dividends. So that's my take as far as how you leverage the potential of PPP today.
Okay, thank you so much, sir. And our next question to you now is, how can insurance companies work with government and other stakeholders in offering insurance policies?
Okay, fine. See, the first thing, as I just mentioned about, you got to build a culture. You know, what is the biggest advantage of this PPP model? When the power center becomes a stakeholder, the level of credibility, the level of confidence in the system and the mechanics of the entire process goes few notches up. There's no denying about the fact. The second is, if you're working with the government, I'm sure the government can interject certain regulatory provisions, regulatory frameworks. They can make the rules of the game. They can also have a stake in deciding about, what is happening is when we talked about the low penetration and very little culture of insurance. Today we have in our country, barring few things, you talk about fire, you talk about the crop insurance, you don't find anything more than that. And if you try and build in the natural disasters, like you built in the earthquake, the premium goes very high. The two essential elements of the entire scheme should be comprehensive, it should be affordable, it should be credible, and it has to be win-win situation for all stakeholders. So the moment premium goes up, it becomes unaffordable for the communities. And if premium is not affordable, then it becomes unsustainable for the private players. So it has to be interjection of the government when they're working with the private parties, even have a say in the premium. And if required, they can go ahead and inject certain amount of subsidies. See, today we have, as I spoke earlier, we have a fair amount of mitigation fund, which was the very recent development when the 15th Finance Commission came out with the guidelines and also with the allocation of funding for the mitigation. And also we have a response fund, fairly large, tune of fund which is there. And to be precise, I think we have at the national level 32,000 crore Indian rupees in the mitigation and about 128,000 crore rupees in the response fund. Now this response fund is what? It is you are making a compensation for the losses. You're trying to build up the portion of this amount, if the government decides today to go towards the insurance. And the large kitty still remains there for the compensation elements and other things. But then if divert certain amount, similarly in the mitigation fund, though insurance doesn't strictly come into the scope of mitigation, but one can decide later, so the government can ponder over it, can think over it, that divert certain amount towards the insurance schemes and all. Awareness and education is another element, which is because the culture will only develop when the community, the individuals and the institutions are aware about the schemes of insurance and all, which unfortunately, they're not very aware. The education level is quite low, especially in the rural areas. We need to invest in that. And I would seek larger role for the insurance companies, rather looking for set piece insurance coverage to take on certain amount of responsibility in these areas also. So that is the way I feel the government and the private players can work together and do many goods as far as the resilience is concerned.
Okay. And so we have a third question for you. Sir, can you tell us what measures are to be taken to ensure that insurance policies are accessible and affordable for vulnerable populations, particularly in developing countries?
All right, Dr. Iba, I think partially I have already answered this.
Yeah.
One of the areas for the insurance market to develop and have some kind of a culture of risk coverage, what we lack or I would rather say where we need to put in much more efforts, whether it's India or other developing countries and many other countries, is we do not have today a very reliable, very credible, very authentic database, because everybody would agree that the insurance would develop only if will thrive on the market only if you have the credible database. We need to scientifically evolve the system, wherein we have kind of a vulnerability assessment, because when you are covering the risk, I should know what is the risk. Unless I'm very clear about the risk, possibly then insurance would not be that authentic or that credible. So the one area where we need to work is this very authentic database and have a very scientific evolution of risk assessment, because based on this risk assessment, the other areas of, insurance cover would develop. Another area is if I look at the multi-hazard approach. Today, as I said, it is only a few elements we are covering, whether it's a fire or the crop insurance. When we talk about the multi-hazard coverage, we do not have a very, because today there is no hazard which will come in isolation, Like as we talk, we are having the flood in California. The climate change is changing the entire dimension of the intensity and the frequency of the disasters. And top of everything, the unseasonal events are coming into it. So we will have to it's become a very complex situation where the uncertainty and the risk factors gone up phenomenally. So we'll have to take those elements into mind, and to make it affordable, I have already said the need to take on board the various donor organizations, various volunteer organizations. We need to seek the government intervention as far as the premium arriving at some kind of a reasonable premium, or for that matter, to divert certain amount of response fund where we are doing compensation, because compensation is not in any way going to empower the communities, going to build the resilience. It is only a short-term kind of a compensation which is given. So divert certain amount towards the risk insurance. Even similar thing could be for the mitigation. Look at the subsidies part in a little larger way, and run awareness programs, the education, and the work out those vulnerability before we desire for a very credible insurance market in the country or in the developing nations. I would leave one or two questions which comes to my mind, because the insurance companies also need to, diversify their scope of operation today. Why I'm saying this? Because there's so many things happening in the world today. People talking about the solar radiation modification, people talking about carbon capture from the atmosphere and sequestration of that. We are looking at the fossil fuel consumption reduction in that. We have the national commitments towards the climate change. So as I mentioned in passing earlier, that the insurance company need to enhance the scope. How do we cover? Today, if I want to go for a startup where trying to invent a new technology for the fossil fuel burning, I know it is a very risky, because it doesn't have a very clear-cut outcome or output, because uncertainty is phenomenal there. How do these are the challenging situations for the insurance companies to venture into it. How do we support the risky research and development projects? So I think it's a time for the companies to divert or rather diversify from the area of operation, from the set piece insurance cover to the larger areas of disaster risk reduction, and they take up a role in the entire spectrum of, like I give an example of the World Bank. Somebody mentioned also, you mentioned, I think, Mr. Mrutanjay, disaster risk financing insurance program in collaboration with the World Bank. It talks about the disaster risk finance, increasing that. It's also talk about the market development. It also talks about the analytics. It talks about the knowledge management, global partnership. So the scope is not only restricted to the financing. It is in an overall scenario, it is trying to empower countries and the individual and the various stakeholders to be more able to sustain themselves, have more resilience. So I think those kind of things we can also think of for the developing nations, either in collaboration or if we are competent to take on ourselves and enhance the scope of insurance companies. We can no more just keep looking at the narrow, window of the insurance coverage. Take the responsibility in the entire ambit of disaster risk reduction, disaster risk management. Thank you.
Thank you very much, sir. I think we all agree that, awareness and education regarding insurance is one of the key points that you suggested, because I think many of us are not really aware yet exactly what should be what are the risk factors, how dangerous it can be, and why should there be an insurance company to come forward. All these, the knowledge of all these things is very much essential, as you pointed out. And as you said, that different organizations should join hands and rethink and redesign the plan and look at it in a more objective manner. So I think we really thank you, sir. But there are a couple of questions I could see in the chat box. Maybe we can take up those questions one by one. Is the co-host ready?
So I would answer the question, Papia Majumdar, right? Yes.
Yeah, sir. Should we just read it out? So, like, for the benefit of other participants?
Sure, please do.
Yeah. So I'll just quickly read it out. So her question was, do you think the concept of organizing disaster risk insurance is divorced from the idea of ensuring everyone with social justice and inequity issues? If the latter is focused and committed for fixing externalities of insurance, will no more be needed? Yeah. So, sir,
thank you. And Swati also came back with the comment that if the question is too harsh. No, I replied, of course, the question isn't harsh at all. And we should raise those sub-questions. If you really believe in justice, then you need to take this question. Well, if you, I'm sure that you heard me, I said that disaster risk financing is one of the mechanisms. This cannot be the mechanism, first of all. And among them, there are different things. There are contingent funds. There could be, bonds. There could be, of course, for insurance as well. But if we really preach for insurance as the only mechanism of risk financing, of course, there will be a divorce from the idea of social justice. And we must not do that. I mean, it is not what we should do. I mean, I say to you that, if you look at the payment mechanism I proposed, I said that even for the premiums, it's not necessarily that the vulnerable people will pay, because they cannot pay actually. I mean, very few of them have any kind of capacity to pay for the premiums. So the government, national government as well as the international government can pay for them, because it is the developed world for whom this is a climate catastrophe. So that's a right issue. So yes, when you talk about insurance, there can be many mechanisms to pay for the premiums, and of course, still we are also focusing on loss and damage fund, right? So in COP27 we have had kind of a victory, for the developing world as well as for our friends in the developed countries who are supporting this idea. Of course, it was just a decision to establish loss and damage financing mechanism. The financing mechanism as such is yet unclear. Hopefully, it will be clearer, not if not in full-fledged during COP28. But that is the whole idea. When you talk about risk, we have to manage the risk using different mechanisms, and risk financing will be, and it's sort of reality, as you said, yes, is one of the mechanisms. And within the risk financing mechanism, insurance is just one of them. It is not the silver bullet. And of course, from a justice point of view, you cannot and we cannot ask the vulnerable community to pay for the premiums. I agree with you. Thank you.
Shall we go to the next question then?
So actually, I can see a follow-up question from Dr. Papia. Like, ma'am, would you like to ask it directly or should I read it out? It would be nice if you could raise that question directly.
Yeah, I think, thank you very much. And Dr. Mrityunjay, it's really like, we perhaps like, I think both of these questions are connected kind of, coming from this neoliberal agenda, that possibly we are just making too many pathways for private market to enter, and can you hear me?
Yeah, clearly.
Okay, all right. Yeah, I think it's a question for our next speaker as well. And it's like, I think we are just, I sometimes feel like, we are kind of very separated from what the realities is. You think about the, Deccan Plateau and the kind of drought that every year, the problem of kind of agriculture related, water issues in agriculture. And we are now sticking to insurance. It does just feel like people are already kind of so indebted in terms of, making up for these agricultural losses and whatever. And then we are asking, even if this is like, we are asking for kind of 1% of premium payment from these vulnerable communities, I feel that it's just too much injustice. I think we are just not doing the right kind of talking possibly we should be doing. I'll stop here, but maybe some response from our second speaker would be great. Thank you very much.
All right.
Hello, sir.
Hello.
Yeah, I am Mr. Sharanappa Varsi from Sadhana Trust, Karnataka. Hello, are you audible, sir?
Yes, sir, we can hear you.
Are you audible?
Yes, sir, we can hear you.
Okay, madam, namaste. My name is Mr. Sharanappa Varsi from Sadhana Trust, Karnataka. So one of the vulnerable community is we are working in slum dwellers in Karnataka. So last flood affected area, we are very thematic, very critical condition to get the relief activities from the government and some other agencies. So how do we vulnerable community or without insurance making a community, we get the any relief from the government or insurance company? Is it possible?
Sure, sir. We'll actually answer the first question raised by Dr. Papia, and then we'll move on to your question. So, yeah, Brigadier Pramod, sir, would you like to answer what Papia had, like Dr. Papia?
I think both the questions, if I could make out the first question, the second one is pretty clear. Relates to the agricultural losses.
Okay.
Is that right? The first question also talking about the where the people cannot pay the premium. I think you said the second speaker said second question was essentially directed that without the insurance, how can the communities be helped? I have a few schemes which the our government is insurance schemes by the government in our country, like Fasal Bima Yojana. Then some state mechanism is there, where the direct intervention of the government, where these benefits are passed on to the individuals. I'm not very sure.
Okay.
There is a national policy on the subject. Where is the Fasal Bima Yojana? Then I'm sure Karnataka state government has a state policy or not. I'm not very sure about that. That is one part of it. Second is we will have to look at the group insurance in a and try and promote the group insurance, because individuals, possibly you rightly said, may not be able to sustain the premium. They may not be able to contribute to that. But if there is a community basis, there is a group kind of a group insurance of the crops and all, that definitely would work. We also talked about some time back how to fund about for these losses. The one important thing is, which is thought of, and we also think about it, there could be a voluntary contribution. There could be a national level or the state level, a national or the state risk management fund. You take the very, very minimal 5 rupees or 10 rupees yearly contribution from everyone, and they create a pool of fund which could be used for these kind of calamities at the local level, at the regional level, or the national level. That could be, again, could be very beneficial for the communities and the individuals in the remote areas, essentially. So that's my take on that. Your question was that without insurance, how do they, we'll have to look at the government, we'll have to look at the group insurance, we'll have to look at the voluntary contributions at the local level, at the regional level, at the national level, and create at all levels certain kind of a pool of reserve. So that's what is my take on this.
Yeah, that is correct, sir. But social security scheme is there. Even natural calamity, we are getting some PM relief fund, CM relief fund, right? Social security schemes is there without insurance. Poor people, they are not aware of the making the minimum 5 rupees, 10 rupees insurance. The natural calamities is immediately they occurs. How they are secured from the government, because government is responsible for unprivileged people social security. You have any social security schemes, either government or other insurance agencies?
Hello. Yes, I got your.
Yeah, please, sir, please, sir, please.
Concerned about if the communities are not, accessible these kind of benefits to them. I would suggest to you that if this matter be definitely raised to the administration and thereafter taken up with the government at the state level. Why? Because it's a very clear. I mean, you all are covered under the Prime Minister's Fasal Bima Yojana. If there are losses, you should be paid off. It's a question of execution. It's a question of the administration's involvement into it, and I think if you raise it to the district administration and thereafter to the state, possibly something will move on this.
Thank you so much, sir. We have one more hand raised up. If you can quickly ask in like 2 minutes, since we are already over on time. Antaru Veera Reddy, sir, would you like to raise your question?
Veera Reddy, sir. He is from Telangana and Andhra Pradesh coordinator. So working under our organization through Spare India. Mr. Veera Reddy, you can ask any questions. So he is also same problem in the Telangana and Andhra Pradesh. So coastal area, flood affected area. So any question is there, you can ask Mr. Veera Reddy. Is audible or not audible?
Yeah, he have accidentally raised his hands. So if there is any other pressing questions, or do you have any final words, Dr. Reba?
Well, I think they have answered.
Can I say something? My name is Professor Shukhendu Bank, and I'm calling from St. Xavier's University, Kolkata. First of all, I'm extremely sorry for joining so late. Actually, I was busy with some of the invigilation duties that I was having in my university. I was just hearing to some of the action points, some of the very important points which were raised by our speakers, honorable speakers, as well as some of our participants. Referring to some of the examples, like some of the experiences that I've gathered while working with various civil society organizations. Sir, like I believe, when it comes to disaster management, the main focus which civil society organization gets into emergency response. And when it comes to approaches and initiatives that one should take into consideration in the context of disaster management, disaster preparedness and disaster risk reduction are something that holds a secondary seat when it comes to the list of priorities that we have with civil society organizations, with CSRs and all. So I believe like it's high time that even like not only with the government, but the private sector, including CSR organizations, they should come forward and think of such initiatives that actually can do wonders in the context of disaster risk reduction, as well as when we are thinking of, this risk financing and insurance. Okay, so it's both the public as well as the private sector, as we call as PPP model. We call it just for the sake of saying, but then when it comes to initiatives that should be catered by the private sector as well, in terms of promoting some of the existing schemes that we have in the government and inculcating the concept of insurance as a priority with the stakeholders, this is something like where I believe we need to focus on and we need to work towards it. What is your take on this, sir?
Shall I?
Yeah, yes, sir.
Okay, I fully agree with you. In fact, when we talk about the civil society organizations and their contribution into the field of disaster management, I think it's no more restricted what erstwhile used to relief-centric intervention of the NGOs and these kind of organizations. Today, they are fully involved right from, you take the like sustainable development goals across the objectives and the targets. They are involved in risk reduction in a much larger way today. They are involved talking about the literacy, their child nutrition, then the women empowerment, gender parity, talking about the decent work, economy. They're involved in every way today. So you are rightly that they should no more just restrict themselves to the relief and come forward with a much larger, agenda for themselves and for the purpose of disaster risk reduction. That's one part. Second, I think to make use of, because their potential is enormous today. And we have seen even in our state and the country, even our country, the civil society organizations doing phenomenal work. They need the support. They need the support in terms of, the policy, in terms of the regulations and the rules. Have a lateral interaction, have the give and take with the government. That needs to be, that is there, that is existing, and that's one area which is developing quite rapid pace today. However, a lot needs to be done, and a lot needs to be done, because they are still, their full potential is still not utilized in terms of when we talk about the disaster risk reduction. When we talk about the relief operation, that's fine, but then we talk about education, training, empowerment, capacity building, and so on and so forth. I think they still can do much more than what presently they are doing. Government support is needed. They need regular, constant, supportive environment they need to contribute in this area. Yes, I fully agree with you.
Thank you so much, sir. And I know we are overboard on time, but we have just one more question. So it was actually raised by Prishti sir, and I would like to read it out. So how can we think of a TPA, third-party service provider, for getting facilitated for accessing the insurance on account of any disaster, mostly the farmers facing drought and livestock holders in the event of animal deaths due to epidemic and disasters like that. So the question is how can we think of a third-party service provider for getting facilitated for accessing the insurance on account of any disaster?
You're talking about the third-party intervention into the carrying out a kind of assessment of the losses, or what way the intervention of third party?
I think if I understand it right, it's about accessing the the services, the insurance.
Insurance has got a very important element of carrying out the assessment of the losses. If the third party, if I don't think there could be any restriction on that. It all depends on the policy framework, how we desire the things to be done. Third party intervention in terms of carrying out collection of premium, or carrying out a kind of assessment of the losses or distribution of the compensation. Why not? Why not? At the end of the day, we are only looking at to enhance the resilience of the people, resilience of the communities. Whether it's a third party or anybody else, I don't think in my mind there should be any restriction on that.
Sure. Thank you so much, sir. Since we are on board of time, we have hands on, but still I think we'll quickly wind up the session here. So I'm actually moving on to the vote of thanks, and I would like to welcome Shri Sukento Bang, Social Work Coordinator, Department of Social Work, and also an Prism India employee, for the vote of thanks.
On behalf of Climatic Action Resource Network, Asia Pacific, and PRISM, we do extend our sincere gratitude to our esteemed speakers, to all the participants for participating in this webinar. And the kind of participation that we had over here and the kind of conversations that we had over here, it just tend to show the rationality and the utility of a very important topic that we have just discussed today. We are extremely thankful, Sir, Brigadier Pramod Kumar Singh, sir, who is the senior consultant at Uttar Pradesh Disaster Management Authority, sir, for your deliberation. It was done extremely well. It was very informative. And there are so many things that personally I have also learned from your deliberation. We're extremely thankful to Mrityunjay sir, Mrityunjay Das, the Deputy Director for CARE Bangladesh, for sharing such innovative models of better practices that have been developed by your organizations, as well as focusing on very important issues relating to policy formulations, as well as some very important concepts that we are dealing with in modern day arena when it comes to disaster management and disaster risk reduction. I'm also thankful to Dr. Deva Chakraborty, retired professor, Department of Zoology, Holy Christ College, for her dissemination as well. Ma'am, your dissemination was extremely informative, and there's a lot that we have benefited out of such esteemed and such a rich dissemination. Thank you all. Thank you for your kind contribution and making this event a very successful one. And once again, I'm extremely sorry for me joining so late. I have missed many things, and I would request Aniruddha sir to please share the recordings of this event. There are many things that not only us, but many of our students were doing their MSW in this university, and maybe after completion of their MSW, they're going to work in this field, and disaster management, disaster risk reduction is going to be the field of the day in future. So there are many things that we can do in terms of engaging our students with some of the very innovative initiatives that civil society organizations and governments they're working with in the context of disaster risk reduction, considering the challenges that we are facing in some of the eastern states, especially some of the eastern states that we have in this country. Thank you.
Sure, sir. We'll be sharing the recording, and thank you so much for that. So we are almost to the end of the session. We had a very interesting session today. We discussed about building a culture of insurance, the role of private sector, and essentially how government can step in on risk financing. And also we discussed about challenges where like both systemic and cultural. And also we had discussions about like how we can leverage group insurance to, make it more accessible. So a lot interesting points did come up, and I would like to
if you permit me, ma'am, if you can permit me, I would just like to raise a very important point. It could just take 10 seconds for me. This can maybe form the basis for some of the upcoming webinars that we have. As far as I'm concerned, I'm not a specialist in this domain. Frankly speaking, my expertise lies in the domain of child welfare, child protections, and these are some of the issues that I've been working for the last 14 years. But when I was having an interaction with some of my friends who are having expertise in this domain and who has been working in this sector for the last 10 to 15 years, I think all of you are aware of Sundarbans and the kind of challenges that Sundarbans are facing from many climatic phenomena and something to do with natural disasters as well. So one of my friends who had enriched experience in this domain was commenting, like the investment that we are making in Sundarbans in terms of, disaster risk reduction, disaster preparedness, by and large, we are doing it in vain. Because anyway, we cannot compete with the inevitable phenomena which is going to happen to Sundarbans. Instead, we should also focus on our policies relating to resettlement and rehabilitation of the displaced populations, which would be happening in the near future. Maybe it could start from 5 to 10 years back. And this is a very important aspect that many countries, especially in South Pacific, they have started working with. They are building colonies for the population, which is going to lose their habitat because of this global warming phenomena. Okay, so don't you think that we need to think of our approach in terms of the way that we make our investments? It's equally important to think in a very futuristic way. Maybe in the next 30 years, we will not find a trace of Sundarbans. So what would happen to around 40 lakh habitants who are living in Sundarbans? Yeah. Whatever, we can build dams and whatever, just to prevent the inevitable thing. Because it's high time that we should also think of policies relating to resettlement and rehabilitation of the potential population who is going to become displaced in the near future.
Exactly, sir. It's actually a very pressing issue. Yeah, it's a very pressing issue. And since we are out of time and I am not sure, maybe we can actually take this forward to we can organize in a follow-up webinar and take this issue forward, unless the speakers have to respond to it, anyone? Yeah, or else, we can definitely think of taking it forward for another webinar and then, consider this question also. Anyway, thank you, sir, for raising that question. So since we are almost to the end, and I would like to once again thank all the speakers, moderators, and, organizers and also for the participants for patiently joining us. It was a very informative session. Thank you, everyone. And before closing, I would like to inform you that our upcoming session, which is on the 23rd of March, is on the topic Sendai framework for DRR. And we'll be discussing about its progress and the challenges. So I would like to request every one of you to join that session too. So we'll have very interesting discussion on that. We have an amazing list of panelists joining there too. So once again, thank you all the speakers. Thank you once again.
Thank you. Thank you very much.
Thank you. Bye.
Thank you.
Thank you. Thank you so much.
Yeah. Thank you very much.
Thanks a lot.